The FedLife podcast is presented by Serving Those Who Serve, a fiduciary, fee-based financial planning firm serving federal government employees and retirees all over the country. This podcast is for informational purposes only and is not intended to be taken as financial advice. All listeners should consult their personal advisors before taking any action. The opinions expressed by our hosts are their own and do not reflect the views, policies, or position of Raymond James. Securities are offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services, Inc. And now, here are your hosts. Dan Sipe serves as a branch manager for Raymond James Financial Services and Serving Those Who Serve. Ed Zerndorfer is our guest and federal benefits expert in the space.
Hello and welcome to this episode of the FedLife podcast. I am your host, Dan Sipe. Additionally, I'm the branch manager here at Serving Those Who Serve and Lee Sipe & Associates. I will begin, as I always do, by saying thank you. Thank you for taking the time to join us in viewing or listening. And above all, thank you for your service to the government, to the country, to me, to everyone. You do not hear that enough, but you will always hear it here. The other thing you're always going to hear here is the guru, Ed Zerndorfer. He is back once again as part of our ongoing mission to reach, teach, and serve you, the career civilian Fed. Once again, we're following Ed's FedZone articles, or as I like to say, your notes are pre-taken. This is just another way we can amplify this for folks. So today we're talking about something that would really save federal employees real money on their healthcare costs. And that is the Healthcare Flexible Spending Account, or HCFSA. And Ed takes the gloves off. He debunks some common myths about these accounts and explains why, drum roll, every federal employee should consider owning one. This is especially timely because we just come out of open season. So if you didn't do it, you have a great opportunity to ramp up for the next one. So Ed, let's start with the basics. You mentioned that only a small percentage of federal employees participate in the healthcare FSAs, even though millions of Americans are doing it. So what's going on?
For the life of me, Dan, I don't know why. I think part of it is just lack of information. People, maybe the individual not getting the information, just communication, whatever. I know that a healthcare FSA started back in 2003. I was in the government back then, and I jumped on it. So it's just disappointing, and all we can do is just keep putting out the information. We do this every open season. I mean, the only time you can join a healthcare FSA is during the open season. That's the open season preceding the plan year, which starts January 1st. So, as you said, we concluded the current year open season, so it's too late for 2026 to join the healthcare FSA. But I think we should talk about looking ahead to next year so that the same mistake is not made. As I said, it's only for employees. Retirees cannot have a healthcare FSA. They cannot have a healthcare FSA.
Gotcha.
And I just want to say also that if you're leaving federal service, at the end of this month, December 31st, part of that deferred resignation program. You have to use up all your money. All the money that's in your account has to be used up by the time you leave federal service. You have to incur the expenses to be reimbursed. And the same thing if you're going to retire on December 31st of this month. There's quite a few people going out. So it's something to keep in mind.
Okay. So, Ed, our Fed decides that they want to look into this. How exactly are they avoiding taxes by doing it?
Well, let's get to some basics here, Dan. And I always say this to individuals, and they ask me this question, Ed, I'm looking for a good health insurance plan. I'm looking for a good dental insurance plan. I'm looking for a good dental vision insurance plan. They say to me, the costs are going up, premiums are going up so much and so on. I just want to find something that's good. Well, it depends it depends how you find something that's good. If your definition of good is a health insurance plan, a dental plan, a vision insurance plan that pays for everything, forget it. They don't exist. There is no health insurance plan or dental or vision plan that pays for everything. Every plan has a deductible has co-payments, has co-insurance that you have that someone who joined the plan has to pay. It has expense. The plan will not pay for certain expenses. Let me give you an example. Take a health insurance plan. Does a health insurance plan reimburse you for the travel to the doctor? Bus transportation, subway transportation? I don't know. Maybe you have to go out to you have to take a plane trip out to meet with a specialist out on the West Coast like that. You have to fly out there because there's this person who specializes in treating a particular illness that you have. You're not going to get reimbursed for your travel. Well, I know a place where you will. It's called a Care FSA. So exactly what is it? When an individual, an employee, decides to enroll in a Care FSA, the employee will set aside a portion of his or her paycheck. When I say a portion of his or her paycheck, I'm talking about their gross pay before all taxes are taken out. Before all taxes are taken out. That includes federal, state, Social Security, Medicare Part A. Those are the state, the two income taxes and the two payroll taxes. So, for example, suppose an employee's annual salary, their SF50 salary is $100,000. And they decided during this past open season to set aside the maximum possible to the Care FSA. How much was that? $3,400. So that $3,400 contribution that the employee is going to be making to their Care FSA will result in their income, their gross income being reduced from $100,000, their taxable salary, I should say, their gross salary is $100,000. Now their taxable salary is going to be reduced down to $96,600. But it's being reduced by $3,400.
Sure.
So that money goes into the Care FSA. And starting with the first day of the calendar year, January 1st, 2026, when the employee incurs a medical, dental, or vision expense for himself or herself or their spouse or members of their family that the insurances are not going to be paying for, the employee can request a distribution from their Care FSA account to pay for the expense or to be reimbursed what they pay. Now, I always like to use a simple example to help better understand what's going on here. Let's suppose we have an federal employee, who is enrolled in an HMO. An HMO typically has, when you go to your HMO, you have your primary physician, and you go, let's say your first visit of the year, and there's for your annual physical, and there's a $12 copay, there. Now this employee happens to be in a combined marginal tax bracket. When I say combined, I'm including federal and state taxes. I'm including FICA tax, that's 6.2%. That's the Social Security tax. And Medicare Part A, the hospital insurance tax, 1.45%. It comes out to be 40%. They are at a 24% federal tax bracket, 8% state, plus 7.65% FICA and Medicare Part A, a total of 40%. Now, here's my question. If this employee is not enrolled in a Care FSA, how much would the employee have to earn so that after you take out 40% worth of taxes, you net $12? Net $12. Answer, if you divide $12 by 0.6, you come up with $20. 40% of $20 is $8. $8 of taxes subtract from 20, nets $12. If the employee wasn't enrolled in a Care FSA, what would the employee do? Tell the healthcare FSA administrator, I need $12 from my account so I can pay the HMO. Or now I know they allow the healthcare will directly pay the HMO. Now, Dan, I don't know how you feel, but I'd rather earn $12 to pay my bill rather than having to earn $20 and all taking out the taxes.
Yep.
That's how the healthcare FSA works. How it works. You're using pre-tax dollars to pay expenses.
That's a great example.
There's another great feature of these healthcare FSAs. I know I use this I use this to the ultimate. As I say, I was enrolled in the healthcare FSA for the years that I was an employee. It was basically 2 years because I retired in January 2006. At that time, I had 2 of my kids in orthodontics.
Dan,
you got experience with orthodontics?
I remember that.
You remember those days?
Oh, yeah.
If I have to get reincarnated in life, I want to be an orthodontist. They got it made. You know, they work hard. I'm not telling them to. They don't have to advertise. Kids are always coming there. They don't have to. They don't have the 3 a.m. emergencies. They work. They work hard. Yeah. They work. Work 5-6 days a week. Anyhow, so orthodontists know that I'm going to use this typical that most individuals do not have money to pay. They don't have the money to pay up front for the treatment. Usually like a 3-year treatment. It may cost like $5,000 over 3 years, something like that. So the orthodontist tell the parent, listen, pay me $1,600 a year over, through 3 years, pay the $4,800 charge, $1,600 a year, which is about $150, let's say about $165 a month, and I'll be very happy. Well, what I did was, when I was in the government, is that I set aside the maximum possible each year to the healthcare FSA, knowing that I had, at that time, 2 of my kids were in orthodontics. It was costing about $200 a month. And each month, I would request $200 coming out on my healthcare FSA to pay the orthodontist. And I did that for a couple of years while I was still in the government, and it paid for it. Now, one other interesting fact. I retired, by the way, at the end of January 2006. It'll be 20 years. So, as I said earlier, when you're a retiree, you cannot have a healthcare FSA. And before you retire, you actually have to use up all the money. So in the open season 2005, this is right before preceding when I was going to retire, I set aside maximum possible, which was $2,500 that year. This is for 2 years, for 2006, for 2006, $2,500. The way payroll does this is when you set aside the amount that you want to set aside for the year, they will divide what's coming out of your paycheck over 26 pay dates. So I made that election. So I got a notice from my payroll processing office that starting with my first pay date in January 2006, I take $2,500 divided by 26 pay dates, comes out to be $96.15. They started taking out $96.15 with the first pay date in January. I had 2 pay dates in January 2006, January 2006. But between January 1st and January 30th, Dan, I went on a medical and dental spending spree. I used up all $3,000 because you don't have to have the money in the account. The healthcare administrator will advance you the money, provided you give them a receipt. I finished paying off the kids' orthodontics. One of my other kids needed glasses, and so I got him two pairs. Got him two pairs in case the one breaks.
Gotcha.
But I used up all the money. How much did I have to pay for that? How much did I put into the account? 2 times $96, which is what, $192? So I got reimbursed $3,000. How much did I put in? $192.
Yeah.
What did I have to do? What did I have to do when I retired? Nothing.
Oh, okay.
I didn't have to reimburse the administrator. That's
Gotcha.
how the healthcare FSA works. You can get advanced the money, and if you end up leaving federal service, your retirement, you do not have to reimburse.
Wow.
So,
Wow. I'll guarantee you folks don't know that one. So, okay, Ed, let's jump into the myths part, because that's the really juicy stuff here. So your first myth is use it or lose it. So it's kind of sort of there, correct?
It used to be that way. It used to be that way. If you did not use up all your money by the end of the plan year, which is the calendar year, December 31st, then any money that was left in the account or left over, you lost. You lost. You just didn't know, and you didn't. But then the IRS made a change. IRS made some changes, and they decided that you will be allowed a grace period through March 15th of the following year to use up the money. You got to make that election. But then they also, an IRS, gave individuals another choice. Instead of using the grace period, they said you can carry over from one plan year to the next a certain amount of money. Now, what is that amount of money? In 2015, when it started, it was $500. For this year, 2025, the carryover is $660. If somebody was enrolled in the Healthcare FSA during this year, 2025, and now it's December, they still have money left over, up to $660 can be carried over to 2026. And you'll have, 2026 to spend that money. That's the case even if you'd elected not to enroll in the Healthcare FSA for 2026.
Gotcha.
Make more contributions. Keep one fact in mind, Dan, that if you are enrolled in the Healthcare FSA and you want to continue to be enrolled from one year to the next, you have to re-enroll. It does not carry over from one year to the next.
That's an important point.
Let's say you're going to retire in 2026. You didn't re-enroll for 2026 because you feel it's not necessary to, you're going to be retiring in 2026, but you have this, you have a carryover. During open season, you still should have had to re-enroll for 2026, even though you're not putting any new money in there.
Gotcha. Ed, your second myth, I think, is going to surprise some people, because I do know that folks are walking around thinking that it's a very narrow amount of things for which you can be reimbursed for a healthcare FSA, and it's much more broad than that, correct?
Yeah, the FSAFEDS, the healthcare FSA, it's called FSAFEDS is the program that runs the flexible spending accounts, the healthcare and the dependent care FSA, because dependent care is different than FSA. But for the healthcare, it pays or reimburses for a variety of medical expenses, including, I'm just giving you a few here. But besides the deductibles and co-payments and co-insurance that I mentioned earlier, massage therapy, prescription expenses, diabetes testing and supplies, wheelchairs and walkers, birth control pills, in vitro fertilization.
That's a big one.
This got to be a very expensive procedure for people who are trying to have a child. Sunblock, I should say, and transportation costs if used purely for medical purposes. If you have to make improvements to your house for medical reasons, like putting in a chairlift or putting in guardrails on the outside, because you need support to get in your house, putting in ramps, things like that, they can qualify for reimbursement for your healthcare FSA. It doesn't take much to use up the money.
Gotcha.
I want to mention one other thing here that I didn't mention under this earlier. I said that there's no medical, dental, or vision insurance plan that pays for everything. You can enroll in the Healthcare FSA. This is the FSA's Healthcare FSA. No matter whether you are enrolled in the Federal Employee Health Benefits Program, you could be enrolled in another health insurance plan. Like, let's say you're a military retiree and you're in TRICARE, you still can enroll in the Healthcare FSA. Maybe you're a federal employee and you're enrolled on a spouse's private health insurance plan. Maybe they work in private industry. Maybe they work for the state, city, and you're on their health insurance plan. You still could have your own healthcare FSA. And if your spouse has their own healthcare FSA, you can use that one to reimburse you for your expenses as well.
Nice. Your third myth, I gotta admit, you rarely surprise me because I know the depth and breadth of your skill set, but this one surprised me a little bit. Some employees think that if they don't use all the money, it doesn't make financial sense to enroll, but you say the math still works out in their favor. So tell us why.
Yeah. My reaction to it is, by contributing to a healthcare FSA, an employee is reducing federal and state taxable income. By most estimates, you're talking about a 40% savings in overall taxes based on individual federal and state marginal tax brackets. In addition, there are easy-to-use tools and apps at www.FSAFEDS.com that help healthcare FSA owners project tax savings. It also helps map out healthcare spending needs and can quickly shop for the latest FSA eligible products. Okay. In short, federal employees who enroll in FSAFEDS Healthcare FSA will help themselves become efficient and savvy healthcare consumers. And the last thing I want to say is, Dan, when federal retirees go to heaven, and they are in the pearly gates of heaven, one of the gates in heaven is called the tax gate, in which the good Lord is going to ask you a question. The question is, what did you do during your lifetime? Legitimately. What did you do legitimately to reduce your tax liabilities? The employee will say, well, owned a house. I was able to deduct my mortgage interest. I paid property and state taxes. I made charitable contributions. The good Lord says, that's wonderful. Well, what about your medical expenses? What did you do when it came to taxes and medical expenses? And the federal employee says, well, I found out that my health insurance premiums that I pay are pre-tax, something called premium conversion. Good. But what about your expenses? Well, I was thinking about that, and I found out that I can deduct my medical expenses, but there's a limitation. The Lord says, what do you mean limitation? My out-of-pocket medical, dental expenses, vision expenses, co-payments, co-insurance, and co-payments, things my insurance doesn't pay for, I can deduct them, but I have to be over a certain percentage of my adjusted gross income. The Lord says, what do you mean? How much? What percentage? 7.5%. So the good Lord says, you mean to tell me if your adjusted gross income was $100,000, you have to have over $7,500 out of pocket expenses? He says, yeah. Thank God I didn't have that type of expenses. I had maybe about $3,000 of out-of-pocket expenses. And the good Lord said, have you ever heard of healthcare FSAs? No. And the good Lord says, you're a fool. You passed up all those tax savings. Not good.
Oh, boy. That's a lot of pressure, Ed.
That's
Well, there you go, folks.
Message. A holiday message. Ladies and gentlemen, take advantage of it while you can.
So
maybe in a future podcast, we'll talk about HSAs, which are almost the same thing, but there are some differences.
Oh, yeah.
But I'll tell you, this is something as an employee you cannot pass up. You cannot. I don't care what health insurance plan you're in. I don't care what type of expenses you have. You cannot lose by enrolling in a healthcare FSA. So please take advantage of it.
There you go. And folks, I didn't know Heaven had a tax division, but it's good that we got clued in on that. This is the kind of stuff that only Ed Zerndorfer knows. So once again, Ed, you are putting out information that really not too many people are doing out there, and you're bringing forth in a way that people don't understand. I don't know how you keep it all straight, but I'm glad you do. I'm glad you do it with us. So on behalf of all feds and SWS, thank you. Folks, that is a wrap. We are Serving This to Serve. Be sure to subscribe to this podcast. If you're on our YouTube channel or Spotify, hit that subscribe button. And please share it with your friends and even a few strangers. Don't forget our live webinars pretty much every single week. Head to swserve.com. You'll see the webinar button. Click it. Whole menu comes up. Sign up for one, sign up for all. The guru will be there to reach you where you are, teach you where you are, and above all, serve you where you are, and possibly even some special guest presenters coming. We have all kinds of surprises coming for the new year, so don't miss it. And share that with your friends. They will thank you. Be sure to read Ed every single week in the Fed Zone. That's fed-zone.com. And you can also get it through the SWServe website. So signing off for Ed, the crew at Serving This Serve, and me, Dan Sipe. Good luck, Godspeed, and above all, remember, it is your FedLife. So please, 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 please make it a great one because you absolutely deserve it. Stay well, everybody. We are out.